Hey everyone, welcome to Drippy Verse. And I hope you guys had a restful weekend here. And I want to quickly go over some of the flow for some of the names I'm watching, what to expect this week in the market, and what to look out for. And is this the beginning of uh, next leg down, or is this a beginning of move back up? This is the question a lot of folks are interested to know the answer for, and including me as well. So let's dig deeper into what's going on right now. And if you guys are new to the channel, make sure to subscribe, like the video, and uh, please know that I'm not a registered financial advisor. Anything I share here is my opinion. I may or may not be in these securities. You're responsible for managing your risk, taking profits in this market and any other market. All right, so let's quickly go over here. So let's look at ES here. This is S&P 500 futures. So when we look at the futures here, they're currently down 14 points. Doesn't really mean much. We could just pull back here to 4,077 tomorrow, and we could see move up, or we could see it move up to 4150 and then down. Either way, very extended here. We are extended here. Let's look at RSI here. All right, if you look at the RSI, and then I'll add another squeeze indicator so you can see me. I disable them, but you can see me now adding it here. All right, and I need to actually open my theme here. Apologize, I should have done this before, but here we go. All right, this is much better. So we were in the squeeze on the daily. The most obvious move was squeeze gonna fire to the upside, and that's what happened. We got a beautiful daily 9 retest, and then since then the market's been ripping. But we had FOMC day, and we had very important economic events which could have led the market the other way. So there was no way to know in advance which way it's gonna go. All we know for sure now is that, well, it kind of looks bullish because Fed said that we'll see how they, depending on the data, if inflation is weak, we might even pull back on the the interest rate hikes, and that's what market liked a lot. And market since then has been ripping non-stop every day, and now we are starting to see some kind of exhaustion now because the RSI is getting over 65 here. We still have some room to go, so so this is something to be aware of, that last time the RSI was roughly around 64 when we saw sell off, and now it's around 60, around 66. And if we start to see RSI divergence here, if the RSI starts to go up, and we could potentially start to see RSI divergence on daily time frame, and that could potentially be a short signal. And we are also approaching important supply area here, which is the bounce area and then the rejection area before the last CPI, last one, right? And or last one. And so very key critical levels here in the market. And excuse me. So we're gonna watch these. We are out of the bear market territory officially, because bear markets are when you are down 20% from the high, and right now we are sitting at, from a closing basis, 13 points only. We were in the bear market earlier around these levels, but once we broke above 3850, we are basically above the bear market territory. So does that mean we are out of the bearish? The market is now bullish. Well, short term looks like it's bullish, but looking at the weekly time frame here, I mean, we are testing right now major supply area here, and then on the monthly as well. So we had a monthly reversal bar here on SPY, and if you notice here, I covered this long time back in a couple of my videos, that every time we go below the monthly 21 EMA here, here, in the hindsight now, when you look about it, here, we always get a green next month. So when you look at this in the hindsight, it's obvious, but were in very, very bearish microeconomic scenarios. And that was the reason that, we have to be careful, and we could have gone the other way too, like 2008. Like even in 2008, we had, like a retest of the monthly levels. So what's it's gonna be? We will see. I mean, if we break above, let's say we break above this level here, right here, 4150, right? And we are above, we hold that level 4150 this month. I mean, we are in for 4300, right? And then we are basically looking at this resistance trend line. Do we get to 4300? Like, maybe we go something like this, a pullback, and then above, and then roughly go to 4300, 4350, and then we have a next leg down. Or do we actually continue the momentum up? We're yet to see. So real quick, let's look at the flow for SPY. What are the big guys doing? The big money folks, what are they doing on SPY? So let's look at SPY right now. All right, so this is all sorted by the premium. Look at this beautiful, look at this, 385 put for 138 days to expiration, and these are out of money puts. Look at the size of this behemoth, 30.6 million. And then there's next one, same guy order placed 3360 put, which is 18.3 million. So I mean, they still have time. So this is roughly in December. So by December, these guys are betting that SPY will go back to 385, which was the low. So will SPY go back to 385 by December, which is roughly 6% move down. And it could just be a trade they are taking, like, they're building a size here for a short position. But overall, the flow, let's look at some of the near dated flow here. Let's look at 21 days. So in 21 days, we are again looking at some bearish activity. So mixed flow. This is not completely bullish, it's not completely bearish, it's majority bearish here. When you see premium, net premium 400 strike is being the most active one, and they're targeting 19th of August for that. So 19th of August, 400 strike is getting a lot of premium. What does that mean? And we can also enable the bid side here just to see a clear picture. Now you can see 51.7, so 50-50 roughly, right? Let's even go back to let's say 8 days of expiration, and then what's up, right? And let's look at these charts. 50-50, right? Let's try to do this for QQQ as well. So a lot of cross orders, kind of hard to read this flow, to be honest. So I'm gonna skip QQQ, and let's look at IWM. And for IWM, we have again a lot of cross orders, bullish, bearish, bullish, bearish, bullish, bearish. Let's narrow it down to 40 days. And let's look at net flow here. A little bit bullish, 56%, right? And let's narrow it down even more, 21 days. And in 21 days, let's see what's the flow. Bearish. So kind of mixed signal, nothing really concrete coming out. So because there's confusion, where's the market gonna go, right? We could go up, given how bullish the momentum is. Look at this previous move. We basically had, for instance, the breakout here. Last time rallied 10%, and this time since the breakout we have rallied almost 11.23%. So how do we know what's gonna happen? We don't know. And then this breakout here, we talked about this one, from the low to the high was 10%. So we are basically, from this low, we are already 11%. So we are in that range where we can see a pullback now. And if this is a bear market, and if we are out of the bear market, what ideally I would like to see is retracement back to daily 9 and then move up. So like we had here. So we are extended on daily, we are extended on 4 hours. I mean, look at this 4-hour RSI here on SPY. It's 75 right now, and we are in the key zones. So right here at the resistance level 415 as well. So RSI overbought on majority of the time frames here. So it's no brainer. We'll see either sideways action. You can have either sideways action, or you can see a pullback. If there is a sideways action, what do? We sell premiums. Look at my previous video, which I talk about how to sell premiums, and we sell premiums and we make money. And if we see a pullback, again, what's the best way? We sell premiums in this market, because a pullback, even though it's there, dip buyers can come in. So either way, it's looking like opening a bear call spread seems to be the best way to play this. And risk is refined, reward is defined. Go a little bit, buy a little bit time here. That seems to be the move in my opinion right now. And we'll start to see some stalling in here at these levels before, if we move down. And if we break this trend line, then yeah, we could fill all these gaps to the downside, and then we'll talk about them when and if it occurs. Let's look at a day by day basis right now. And now let's move on to QQQ as well. Let's look at QQQ. QQQ actually is at the top of this range. Top of this, actually broke above it actually. So that is really bullish, right? We are at the top of the range, but does that mean that we will, we cannot pull back? I mean, sure, we can pull back. It doesn't have to be exact number, right? We are still in like clear supply area here on QQQ as well. Like you can see here, 1 touch, 2 touch, 3 touch, 4 touch, 5th touch, 6th touch, right? So are we gonna break out and just straight rip? Unlikely, right? Unlikely. Probable, but unlikely. And also we have this thing coming up here, right, on QQQ. Look at this. So we are very close to this resistance here on QQQ as well. And that's where third touch, usually we see pullbacks, and we see the retracement back to at least test of this trend line on QQQ. So that's what I'm watching. So somewhere around 322. Those are the levels, 320 to 322. Let's see what happens there. And we could just stall around here for a couple days and then poop, right? Next CPI data is coming. Let's look at VIX real quick. So VIX now broke below this long-term kind of support area, but we are still holding this trend line support. We are right at this trend line support. So can VIX bounce tomorrow? Can VIX come back to life next week? And can we see VIX come back up, or does VIX actually start to crash, go below 18 for a while? And it's gonna be interesting to see what happens. Like, if VIX is below 18, what kind of market we'll be in? Like, steady bull runs, swing trades could be a good opportunity for swing trading. And that's what I'm watching and hoping that we could get that. But so far we have seen that VIX always comes back. And let's look at equity put to call ratio. Still at 0.8. I mean, we are still at 0.8, and we are not here at 0.5. Below 0.5 is where market is super bullish. We are still at these levels, put to call ratio of the whole equity. Let's look at mmfi, mmft. I'm sorry, I gotta go here. And percent of stocks above 50 moving average, 50-day mmfi. So we are 68%. This is where we start to see pullbacks. I've covered this in the past, where at these bottom levels we see markets start to rally, unless it's a crash. And at these top levels right here, I mean, this is where we start to see pullback in the market, when 68 to 70% of the stocks in the market are green, are above their 50-day moving average. That's when we start to see pullback. So looking like we might see a pullback soon, maybe tomorrow, maybe day after tomorrow. But looks like it that we are going to see that. Maybe we could go up a little bit more, like 76%, something like that. And let's look at percent of stocks above 20-day moving average, right? Percent stocks above 20-day moving average are back above 75. So roughly around 80% of the stocks above the 20-day moving average. So Once that happens, we start to see pullback. So pullback looks like there is a high probability we will see a pullback. And will this be a nasty one? Will this be a small one? That's something we cannot tell right now. Let's look at Bitcoin. Now Bitcoin got rejected here again. It's just in a range here. I mean, Bitcoin is just, it's no, like, it's not good. It's just in a range. So I personally think it's just gonna go back here, test the low, and then be in this range for a while. I mean, the weekly is extended, but I think this weekly EMA gap will thin out. Like here, it will thin out. This will 9 and 21 EMA on the weekly will start to compress, and that's when we'll see if it goes up or down. Because right now it's just gonna chop for months, I think. And that's what my prediction is for Bitcoin. We could go up and down. We could see volatility, sure, given the market in general, but for it to go back to bullish mode, I think needs a lot more time. And let's look at Tricky Dixie. Now, Tricky Dixie here is starting to break below 105. We talked about this earlier, that if we start to see Tricky Dixie break down, we could see commodities start to rally, right? And that's what my focus is on, oil and gas commodities, because Tricky Dixie goes down means good for commodities, and looks like if we break below this 105 level here, right, we could see some nice action on commodities. And we are already broken this trend line. We are staying below this for hours now. We are 4-hour time frame has shifted to the negative. So unless it shoots up, chances are that Dixie will cool off a little bit, and we could see commodities start to perform well. And with that said, let's look at crude oil. Now, crude oil got rejected hard at this level at 102, which happens to be the the weekly level where right here. So there are buyers here, though. You can see here this is a clean demand zone. You can see the wicks here. What do I think about crude oil? I think that if crude oil can break above 102, we are talking about again bull rally here on crude oil. And if that happens, guess what, buddy? Inflation hasn't peaked. But if crude oil starts to dump here, we will see what happens. But looking how energy names are breaking out of their bases here, just massive earnings beat. Looks like they will retest the high, or at least try to retest, fill this gap here. Oxy looking beautiful here. The weekly chart for Oxy, I mean, this is a weekly breakout here after consolidating for weeks. So we could test the high of 52 weeks high here, which is 73 level, right? And if you look at the past sell off on crude oil, you can see that it immediately turned the EMA ribbon, flipped to the downside, and then we continued the momentum down. Same thing here back in 2014. Let's look at right here. This was 2011. We see a pullback, and then damn, what a rip, right? 2008, the main one which people compare to. 2008, look what happened. It pulled back, create a new high, and then markets start to sell off. This is when actually we start to see big, massive moves down. So it like right here, this is similar to what we had, top, went down, consolidated here in 2007, and then we had again massive run on oil. So it's kind of looking similar, very similar here. With crude oil, I think we have energy is the place. I think we can stay there for a while, and Berkshire is in Oxy. So I mean, Warren Buffett I consider as one of the smartest mind when it comes to investing, right? Not options trading, of course, but investing wise he is. So I think as long as he's in Oxy, he's not liquidating his position, even though Oxy is up already, it says something, right? So yeah, that's the one to watch. Earnings are phenomenal for oil and gas right now. So let's talk about some of the startups I'm watching now, because we're talking enough about the macro, and we have the chips bill which passed, which is good, and then we have this new climate bill which is passing. So as we're approaching the election dates, we're seeing a lot of, like, news coming out, good news, and then some bad news with respect to monkeypox. So I hope you guys are careful with it, because a lot of people thought COVID, um, oh, it's not gonna spread, but then monkeypox could be very similar to COVID. So first setup I'm watching, with that said, is Oxy. Very nice hold on the 9 day, and then now finally gapped up and broke out, and I think it has room to go up to 67, and then maybe tap the $70 as well. I mean, once it goes, it goes. We had seen something similar here, couple days of consolidation on 9 EMA on the daily, and then boom boom 2-3 days straight up, like 8% move, 5% move. The earnings are coming soon. Earnings are 2nd of August, so day after tomorrow earnings are there. So I mean, we can see big move on Oxy tomorrow. So Oxy's on my number one watch. And then some, so I'm gonna talk about intraday trades versus swing trades. So I will mention clearly, this is an intraday play. So this for me is an intraday play, and potentially swing the runners. So Oxy intraday will potentially swing the runners. Always be hedging Oxy. Always hedge Oxy with, like, out of money puts. In this case, I would hedge my position with 60 or 55 puts, just in case. Uh, it's a volatile name. So that was the first one, and then the next one I'm watching is TPR for Oxy. Let's look at the flow as well, for Oxy here. So let's change this DTE. Let's sort by premium here, and minimum premium is 5,000. Today's trade is only out of money only. Okay, and let's look at the buy side first. So I want to show you guys. So look here, they're basically buying, swing trading this 82 days to expiration, 75 call, and there's some 200 days too, 19 days 70 call, 19 days 70 call, which came in the morning, and there's some 52 puts, which is odd. I mean, like, stock is at 65, so this seems to be hedge in my opinion. It's really odd though, right? Um, so Oxy looks overall bullish here, a lot of bullish activity. Um, Again, maybe this is the hedge, and then they're buying the shares. And let's look at the next name I'm watching here is TPR. I talk about this in my stream as well, Tapestry. So it's a footwear name, like, Nike, luxury retail. And look at this, resistance acting as a beautiful resistance. Every time it comes here, mega dump, 1 to 3 days dump, 1 to 3 days dump, 3-4 days dump here. So it's looks like, if market is weak, this is setting up for a mega dump here, and we could break out too. It's possible we can break out, but the flow tends is looking bearish, so we rely on the price action. If we have an engulfing red day, if we are down, let's say 2%, if we are down to somewhere between 2 to 5% on this, um, there's a good chance that we should swing puts, because this one moves rapid, this one moves big, right? And earnings are coming soon. Kind of bearish on the whole sector in general, the consumer cyclicals, and it's at key resistance, key supply here as well. If we break above this supply, I'm bullish, but until then, I'm leaning bearish on this one. TPR here, a lot of bearish flow came in later in the day, roughly around 312. Same guy, seems like the same party here. 33 puts being loaded here, 19 days to expiration, and 30 puts. So they're expecting 10% drop with these 30 puts in 20 days. So this one's the top of my watch list apart from Oxy. Next one is Lucid. Now Lucid, look at this. Let me just remove these alerts. A couple things I want to mention is, first, Lucid looks like it's bear flag, right? But it's also a key demand zone here. This key demand area here, roughly around 17.5, we have seen act as a demand, and also we are at this support area. So do we break out or do we break down? Not sure. On the 4-hour chart here, we're starting to hold these levels. We did get a wick, but we got rejected. Now if it breaks below 17.65, we are talking about room towards 16.5, and earnings are coming soon, right? And notice how Lucid has been actually dumping while SPY was ripping last couple of days, right? So that's a sign of bearishness. 4-hour momentum here turned bearish. So it's possible we might retest maybe 18, maybe we retest the $19 and then dump. Given that this line is acting as a support here, every time price starts to hold here for a couple hours, 4 hours, we could see big move on Lucid to the upside, and then maybe it dumps. If it dumps straight up 17.66 below 17.5, I mean earnings are 3rd August, and which could break the bear flag here and then go down. So Lucid is I'm watching Lucid, and flow for Lucid is mixed. There's nothing really significant. I just like the technical aspect of it. With earnings coming, there's actually a lot of call buying here with 19 and 21 call, which I explained, right? That could be the case here, that they're buying calls because it's at a key support level, right? And let's look at other one here. Let's look at Xpeng here. Xpeng looking really good actually for a long play, and I don't say it lightly, because even though China names have been dumping, this is back to I mean, like, look at this monthly. It's back to this monthly area, right? Monthly support, weekly support area back here. We have a doji here weekly. We are in the back on the daily. Daily we had a hammer here on it. And let's go back to 4 hours. So what I'm expecting out of this is that we get a false breakout. This was a dip by false break, and maybe retest of this somewhere in this zone. I'm expecting I'm gonna start opening a swing position here if it comes back to here. This level here looks like a really good level in my opinion to start adding some calls, maybe 20-30 days out. With the earnings coming, Xpeng is a good company. They have consistently delivered more vehicles every other earnings, and they did miss the last earnings, and but before that. Now some things to consider though is that although they are a good company, like in China, the economic situation is much worse, and with the COVID lockdowns, I mean, sure, the people got less cars, but Tesla came out with decent numbers. So let's see what happens. It's been consolidating here for a while, so let's see. And let's look at the flow as well on this one. A lot of bullish orders here, 25 calls later in the day, actually 25 call for 20 days to expiration. So bullish orders on this one as well, and I like the chart as well on this one. So they got this around, what was the price? Stock was 24.3 roughly, so they just got it into the close, roughly around the close. But I think we might be able to get around 23.3, so a little bit more cheaper, but they did get time, so I think getting time here makes sense. Okay. we'll keep monitoring the flow as well. Next one I want to talk about is BAC. All right, so BAC is in a massive squeeze. Financials just going sideways, but we did break above this key resistance area, right? And we after the earnings, and we are basically consolidating. So what does it mean? There's likelihood that we will continue up, right? These could be the names which, you know, tech can take a pause, and financials can run the market. They have been oversold for a while, and I mean 4-hour RSI is starting to, you know, increase, and price is not really increasing. So we have a divergence here. Let's look at daily. So daily, again, we are coming out of this saucer bottom on the RSI, and we have already seen massive sell-off on these. And if you look at the EMAs, yeah, so we are right above the daily 9 and 50. So let me reset it. So daily 9 and 50 are right here. Usually when I see that when there is a close above daily 950, this can take off. This can take off for a couple days. And BAC is on top of my watch list as well. If market pulls back, sure, we can see them come back here to this level, and then if it breaks below, so we play it smart. We play the price action. We don't just enter calls without, or puts without looking at the price action. So BAC, Lucid, recap here: BAC, Lucid, XPEV, and TPR. So TPR is a swing play with earnings coming soon. Xpeng, again, a swing play with earnings coming soon. Lucid, intraday, not interested in swinging Lucid because volatile up and down, not really any clear move on this one. And then finally we have BAC, interested in day trading and swinging this one if it breaks out. So these are the setups I'm watching. On Discord, I will share 2 more setups which I'm watching. Very, very good risk reward on them, and we'll take it from there. I hope you guys like the video. Please make sure to subscribe and like for more such content, and I'll catch up with you guys later.